What is DeFi? Can I earn loads on my crypto using DeFi? Can I even take out a crypto loan using DeFi? Is it a large risk using DeFi? Or simply, what is it? What are the pros of DeFi? What are the cons of DeFi? These are the questions I'll be covering in this video. But before I do, this video is almost a follow-on from the first two introductions to cryptocurrency videos that I recorded, links to which you can see here and in the description below. So depending on your starting point, if you haven't watched these first two videos to begin with, I would start with those personally, so you understand some of the terminology and technology we're going to be going through in this video today. But let's jump straight in. DeFi stands for Decentralized Finance. And I'm actually going to start by looking at centralized finance, or CeFi, because the financial system we use every day in the Western world is centralized. So, in centralized finance, often known as CeFi, put simply, we place our money in banks or third parties for them to hold and us trusting them. Because centralized finance requires a central authority to hold your financial assets for you. And I could go into a lot of detail here about centralization and give many specific examples, the advantages, the disadvantages, but this video is about DeFi, so I'll try and keep this as concise as possible. So these banks are then supposed to hold our money and facilitate the movement of it when we want to transact, including us withdrawing it. And every service on top of that is centralized too. So if I want to take out a loan or get insurance, for example, I need to go to a centralized institution that offer those services. And they obviously charge fees to do so. All financial transactions are overseen in centralized finance, whether that is payments to loan applications. And there are obviously people in charge of these, often large centralized institutions, who make the decisions on your behalf and they set the rules. But it's fair to say there are some positive aspects to CeFi, because it has been something humans have used for thousands of years, and people don't tend to like change. Rather than you having to hold on to all of the money you earn, store it, secure it, carry it, etc., if there were a trustworthy institution, and I emphasize here the word trustworthy, but if there were one that would hold it for you, that makes sense. We're also used to this system, and your funds are probably insured up to a certain amount due to regulation. So these are all positives. And if you are in a developed economy, ease of access is there for us also. We can jump on a phone, you can jump on a laptop and access internet banking very quickly. However, there are many downsides to centralized finance, and here are just a few. So firstly, settlement times, in the sense that it can take days for some payments to go through, or whatever financial service you're using. Secondly, convenience. Banks aren't open 24/7, often only Monday to Friday, depending on where you are, and you have to wait if you want to do pretty much anything over the weekend. You might pay something like a credit card, for example, and have to wait until the end of the next working day for that to show in your account. Thirdly, bureaucracy. Just the amount of admin that is involved, how much ID you need to show and the steps you need to go through, whether that's for a loan, a mortgage, insurance, or even trying to withdraw your funds. I don't know about you, but who's been put on hold by a bank and you're just sitting there for ages waiting, for example, or the fraud team at your bank might just block a transaction that you make. And again, you need to try and speak with someone before they'll allow you to transact again. So it's very centralized and there's a lot of bureaucracy. We can also look at the cost and the accessibility of centralized finance, because many people don't have access to the financial system globally, and banks can limit access to certain services. Because according to the World Bank in 2021, 1.4 billion people were unbanked globally. So how well is this system that we're using working across the world for everybody? And did you know that remittances, so essentially sending money to someone else, for example, if a family member works abroad and has to send money home to their family, remittances will be about $840 billion in 2023. So that leads us on to the question of trust. And I suppose the question here is, do you trust centralized financial institutions like banks? Do you understand what they do with your money behind the scenes? How much interest are they paying people for keeping their money with them? Do you know how much debt banks have or how leveraged they are? Are the banks that you use susceptible to a bank run? Or do they have clear rules that are easy to follow when you use their service, or are they changing them? Again, we could do a long discussion on trust, and I can do a more detailed explanation if that's something you're interested in. So just let me know in the comments below. And I would also recommend you watching some of what Robert Breedlove says about this if you want to delve a bit deeper into it. But let's move on. With centralized finance, you have no say in the governance or the rules set by a financial institution like a bank. You just have to try and follow them the best you can, even though they can change a lot, and at times it can feel like they're trying to catch you out. And let's look at permission, because you will need to ask for permission, or you'll need to explain yourself when you want to access centralized financial services. You could even be refused or charge a different amount of interest based on many different factors. You don't actually hold or own your own money. The bank or financial institution does, and your funds could be mismanaged or the institution could go bankrupt. There's a lot of ifs here. And finally, it is an old system. We've been using centralized finance for so long because there's been no real alternative. But now we have a new blockchain, digital ledger, smart contract, consensus mechanism technology that could transform finance as we know it. And don't worry if those terms don't quite make sense. I'll be covering some of them in this video. So that leads us to DeFi. And what is DeFi in comparison to CeFi? DeFi is decentralized finance. So there is no intermediary or bank that holds your funds or crypto. This means there is no central or single figure in charge. And I think the diagram here explains very well the difference between DeFi and CeFi, because with CeFi, it's us placing our money in banks for them to hold and us trusting them. Whereas with DeFi, there isn't an institution in the middle in charge, essentially. So how does that work with DeFi? This is all done through blockchain technology, which, as you can see from the definition in the image here, that includes distributed ledger technology that we saw in a previous video, because I explained what these are in my introduction to cryptocurrency videos, links to which are here and in the description below. They're also done through smart contracts and peer-to-peer technology. But let's take a look at a bit of DeFi terminology before we proceed. So firstly, a Dapp is a DeFi application or decentralized app, and these dApps are built on different blockchains, which we'll see in a bit. In other words, they're basically digital software programs that run on a decentralized network. And they combine a smart contract, which we're going to see next, and a front-end user interface. And a smart contract is a digital contract here between the user and the Dapp that is stored on the blockchain and is automatically executed, or self-executing if you will, when predetermined terms and conditions are met. So it's basically the contract you enter is called a smart contract. And this contract or agreement is directly written into lines of code rather than a contract as we know it between two parties. So it's written into code. So when the Dapp and the technology is ready to go, smart contracts are in place for the financial service on offer. And that could be trading, lending, borrowing, or anything really. And that gives us an idea of the potential for this technology in the future. Smart contracts are immutable. So in other words, that means they can't be changed. They are verifiable, so can be viewed and checked, and they are autonomous. So that means they are run automatically by code rather than needing a central authority figure like a bank or other institution to authorize it or give permission. So what you should have here is essentially a decentralized finance or DeFi service or Dapp that is secure because it's immutable or it can't be changed by someone, is protected by code, and you don't need a central figure, institution, or simply a human being controlling it all. The next term I'd like to look at is a DEX. And a decentralized exchange or DEX is a peer-to-peer marketplace where cryptocurrency transactions are made directly or traded without handing over custody of your funds to a centralized intermediary, like a bank. As we've seen, These transactions are facilitated through the use of smart contracts. So a user can go to a DEX, or a decentralized exchange, to swap their cryptocurrencies using DeFi rather than having to use a centralized exchange. Each DEX will be different, and examples include Uniswap, Curve, PancakeSwap, among others that you can see here in the top 6 by total value locked at the time of recording this video. And we are talking about $3.7 billion down to just under $350 million. So that's a lot on these decentralized exchanges. By the way, just for your information, you will need a digital wallet that connects with the DEX to operate it fully. Some DEXs even let you buy cryptocurrencies and let you stake them, which means lending your cryptocurrency and receiving a yield in return. And finally, there are decentralized money market protocols, and they offer borrowing and lending. So you could lend your crypto and stake it, as we've just seen, to get some interest back, but you could also lend your crypto as collateral to get a crypto loan. And you can pay the loan back whenever you want. There's no specific time frame like there is in centralized finance often. You just need the collateral, which will be crypto, to put down against your loan while you still have it, as that is what protects the money market protocol. And there's obviously interest to pay on the loan, and you can see that interest and you can see the value at all times. So this is an example of putting your crypto to work for you, and it doesn't matter who you are, it doesn't matter where you live, it doesn't matter what your financial history is. You simply need enough crypto to put down as collateral to get the loan. Just be aware that there are risks involved in this and in DeFi in general, so please do your research if you are planning to get involved with DeFi. And I do offer one-to-one coaching should you wish to explore anything in the crypto industry and want someone to do this with you and look over your shoulder. And if you are interested in this, just put education in the comments below and I'll get in touch to book in a free 30-minute video call. Also, if you do enjoy this content, please do like the video and subscribe to the channel, as it really does help to grow it so I can continue to offer more content like this. And this is obviously not financial advice, and I'm not encouraging anybody to get involved in DeFi as per se. This is just education. But one of the biggest risks of getting a crypto loan, in my opinion, would be if the value of the cryptocurrency you put down as collateral drops significantly. This could mean that the amount you borrowed isn't covered by the amount you've put down as collateral. So you are at risk of being liquidated. But you can see this amount live, often shown as a percentage on the platform. So it is there for you to see. This is giving you the idea of the opportunities involved in DeFi and what there is out there and what's growing. And you can see pictured here the top 4 money market protocols by total value locked, which include Aave, which is on multiple blockchains, Just Lend, which is on the Tron blockchain, Compound, which is on a few as well, and Venus, which is on the BNB chain. And again, we're looking at a lot of cryptocurrency being on these money markets, from nearly $5 billion worth on Aave to over $684 million on Venus. So you can actually even get insurance now in DeFi to protect you should you want it. So a lot of the centralized services that we know in finance are now available on DeFi. So what is the largest blockchain in DeFi? As you can see here, Ethereum is by far the largest DeFi network, with over 57% of the overall total value locked on all blockchains at the time of recording this video. And you can see the total value locked in this table in the penultimate column on the right, and see just how much bigger Ethereum is than all of the other chains. On Ethereum, you can place dApps, and you can see here just how vast the Ethereum ecosystem is. Ethereum has gone through a lot of changes recently, the biggest of which is moving from proof of work to proof of stake, but this isn't the video to explain that in more detail. So what are the aims and the advantages of using DeFi? Firstly, decentralization. Also, every transaction can be viewed and verified on the blockchain, so openness and transparency. Thirdly, DeFi is programmable, using data and smart contracts that we've seen that automatically execute rather than needing humans to do that. So it's programmable. It's also inclusive because it increases access to financial services globally. Many DeFi protocols are open source, And what that means is that any developer can view, audit, or build on the blockchain to create new financial services and products. So it's interoperable and open source. It's also trustless, as it can be non-custodial, and this gives users more control over their money. This means that you hold your own funds as opposed to a third party, essentially. Transactions are also in real time and they are verifiable. And DeFi is permissionless, because you shouldn't require KYC, which is essentially providing identification as proof of who you are, and it should be open to all. Wherever there's an internet connection, anyone can stake their crypto or essentially put it on a platform to gain a return or yield, trade or swap one crypto for another, take out a loan using a DeFi protocol without having to go through the disadvantages that we've seen of the centralized financial system that we did look at earlier. So let's say I want to get a loan and we're operating in the traditional centralized financial system that we know. If I'm someone without access to a bank or traditional financial services, I simply can't. But let's say for the purposes of this example, I can, and this will differ depending on which country you're in, but I might need to go through the process and the admin involved of applying for the loan. I might need to wait for the bank to approve it. I might need to justify who I am by showing specific ID that they'll accept, and then explain what I'm using it for. This could involve phone calls and being put on hold for what seems like forever. I might have to go to the bank to show my ID. I might have to queue up there. I even might have to explain to someone why I need the money. And if the bank doesn't like it, they just won't lend to you. And an example of that would be if I'm looking to purchase crypto. And remember, this is all only during their opening hours of normally Monday to Friday during the day. So that's just a basic example of taking out a loan in the centralized financial system. Whereas with DeFi, if I'm looking for a loan again, let's say, I only need the collateral to put against the crypto I'm borrowing. I can go online 24/7, add my collateral there, and get the loan there and then. I can then view it anytime, I can repay it anytime, or add collateral anytime. So you can see the big advantages of this system in DeFi. However, there are some downsides to DeFi, and the first one I'd like to look at is user friendliness and just how complex it is, because DeFi is still very new as a technology and it's frequently being improved and updated, so it isn't actually easy for someone to use. Some platforms are not easy to navigate, and you have to try and work out things like how you can bridge from one blockchain to another, which is not straightforward at all, how to add liquidity in liquidity pools, what yield farming is, what a pair is, what impermanent loss might be, what a wrapped token is, and what wallet you should use and which platforms you should use. So the list goes on and on and on for DeFi. So it is quite complex. And I can do future videos on these things specifically to explain them if you want to let me know what you need in the comments below. And secondly, hacks and exploits do occur in DeFi. So that is a downside of DeFi, as do scams. So in my opinion, and this is something I put at the forefront of my education and why I advocate, we must put safety and security first and not explore chasing high returns in DeFi or in crypto in general. Linked with these, you need a lot of time to research and educate yourself, because DeFi is still in its relative infancy. And I believe, and this isn't financial advice, that you need to do your research very thoroughly before you invest in a DeFi project or start things like yield farming. And finally, almost any company can call themselves a DeFi platform, even a government can. But as I've mentioned, what I advise everyone to do is to have the knowledge to work out for yourself if it is actually DeFi or if it's still just CeFi or centralized finance that we already have. For example, here are a few questions that I advise people asking before they get into DeFi. So firstly, is it immutable? Can it be changed? Can it be edited? Is it public? And can the platform be audited? And has it been audited? Is it collaborative? Whether that be the amount of tokens that the protocols team hold, or whether the users get a say in the governance or the consensus mechanisms or how it works, the particular platform. How much power does the platform hold over its users and over the users' funds? Can they be seized? Can they be frozen, for example? Is a platform permissionless and open? Does it require no permission, no KYC, which is where you have to prove who you are by showing ID, for example? Can you add collateral and can you withdraw your crypto at any time? Or is there a lockup or is there a staking period? And finally, is it decentralized? Which is where all the properties we've just mentioned in this video and all of the questions above, this is where this comes from. And that's the big point. Is it decentralized? Because in my opinion, a growing amount of DeFi is actually quite centralized now. So a platform may not actually fulfill the properties we're looking for in DeFi. So the question is, what is the point if it's following the same centralized structure, or it's being used only to benefit those who are on the inside or who have some sort of control over user funds? And I think this can only increase as more regulation and more institutional investment comes into the cryptocurrency market. DeFi is still a new and quite complex space with many blockchains, platforms, websites, bridges, etc. In fact, there are thousands of DeFi protocols, so I would strongly advise educating yourself on DeFi before you invest in it. So just to give you one example of what you should do as a minimum, please check out whether the platform or the protocol you're about to use has been audited. That would be a first minimum starting point. And if you are more of a hands-on person who wants to just try out DeFi first and learns better through practice, please do so with not much money as a test. So just an amount you don't mind playing with, or it doesn't really matter if you lose it, rather than investing huge amounts. And if you do want to work with someone on this and have someone look over your shoulder, as I mentioned before, I do offer one-to-one coaching to those who have the means and the desire to educate themselves further. So if you're interested, put education in the comments below and I'll get in touch to book in a free 30-minute video call. Alternatively, you can just send me a DM on X, which was formerly Twitter. And I'd like to end this video by answering two common questions I get asked about DeFi. Firstly, can I make huge returns using DeFi? Because some people come to me saying, I want to put X amount of money into DeFi and make loads of money back. Just tell me where to put it that will give me maximum returns. And some people honestly are ready to invest tens of thousands, hundreds of thousands. And I've had a few people that are really looking to even invest more than $1 million or pounds, whatever it is, to maximize their returns. And the short answer to the question is, yes, it is possible. If you know what you're doing, if you're happy taking large risks, if you have some capital behind you, and you have a lot of time to stay on top of the DeFi platform, on top of the returns, on top of the state of the wider cryptocurrency market as well. But this is a lot of ifs. So I normally err on the side of caution, and I just want to show you an example of the kind of returns that are available using DeFi and the risks involved. So as you can see here, there are returns available of 1,338% down to 210% on your crypto. So that's incredible, right? Well, yes and no, because there are huge risks involved in investing in pools like this, and you may well end up losing money. It's 1,338% return for a reason. And none of this is financial advice, but in my opinion, safety and education should come first over chasing large returns. You've probably heard this already several times from me, but I normally say that if there is a doubt, there is no doubt. Don't invest in it, but educate yourself first. And that's what you're doing here in this video. And this is an introduction to DeFi, so I'm not going to go into too much detail here, as there's a lot to process, but I can do a separate video on this, which is called yield farming. So if you'd like that, just let me know in the comments below and I can explain more about DeFi and we can get more involved into it. And the final question I'd like to end this introduction to DeFi on is, will DeFi change the world? And this is a really difficult question to answer, given how many platforms exist, the different services they offer, which chain they're on, etc. So I normally respond with this, which is, ask me about a specific platform, but I will rephrase the question to, can the DeFi technology change the world? And my answer to that is absolutely. But I would love to know what you think, so let me know in the comments below. And thank you for watching. I hope you got something out of this video. And if you haven't already, please do like and subscribe, and have a great day.